individual names, and then we'll just keep it rolling. Um, Juicy, do you want to start us off with some market sentiment talk?
Yeah, man. Yeah, my name is Xavier from Juicy Trades, guys. As you guys know, if you don't follow me, shoot me a follow. Be sure to shoot everybody here a follow. I am a short-term trader primarily, but I do invest in a long term. But I got to tell you, man, this market we're in, I have not seen this since the January, what I call the runaway train market, where SPY went in this melt up and just everything just went up. So for me, I've been doing extremely well, and honestly, I could have done better because I was skeptical of the market, saying, "Hey, we're extended. I'm welcoming some forms of consolidation, but this thing keeps going and going and going." But the real question I want to ask everybody and all my peers now that we get actually together and talking to each other is, when does this show end? All right, because we saw the February and January run up, then we ran into some extreme chop into March. So when does that happen, and do we actually pull back?
Great points. Yeah, I think that's something which we'll absolutely discuss, as that's probably on so many people's minds who are wondering, have I missed out, right? So some of these names are so extended. Should I be buying puts on some things? And I think that's something that we're going to definitely dive into. Danny, you want to go next?
Sure. Yeah. I'm still focused on individual names. However, when you look at the indices, so for instance, I'm looking at SPY. We had a nice W bottom with an ABC correction. I'm tracking a 1-2, possibly in a wave 3 right now. The one troubling thing I saw today on the close on SPY was the spinning top candle. So yesterday we had a breakout of all-time highs. And today we got that nasty spinning top right below a 200% extension. So, we've run for, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. We've run for 8 out of the last 10 days. We had one massive candle up, and then we've just been melting up. So, like all things, market can't go up forever. And so, what I'm looking to see is possibly a little consolidation or maybe even a bit of a pullback here so we can continue to go higher. So that's SPY. The Qs are a little lagging behind. So we've all-time highs here at 382 and change, and we have somewhat of an inverted half form today, right at that mark. So again, markets can't go up for to kind of wait and see now. Be a little more cautious. I always like to say to the people in our room, trade when the days are easier to trade and pull back and scale back on the days that are going to be harder. And watch individual names to show strength when the market is either consolidating or pulling back. And I think that's what we're going to probably see for the next couple of days. And buying the Qs Wednesday and Thursday, and it's not breaking down, watch for a blast off on Friday.
All right, I'm definitely something I'm keeping my eye on there, and I appreciate the terminology with talking about how it went into close. That's certainly something from a technical basis that we're always keeping an eye on. Andrew, you want to go next?
Yeah, what's going on, everyone? Thanks for joining us. Yeah, so I'm seeing a lot of the same things as Danny. Like the market, so maybe like 2 weeks ago, when the market was kind of chopping out its bottom, that's where I was really adding to positions and being a little bit more aggressive. Now we've just had this beautiful run, and it has been fantastic. Like everyone's making a ton of money. Like it's just great. So, yeah, market's doing awesome. We're approaching the best seasonality of the year. It is very tough to short the market or try to step out in front of it when we have the holiday season coming up. Like a lot of the fund managers and people that really have the decision making power on these trading desks, once you start to get into like that Halloween time, that Thanksgiving time, Christmas time, a lot of people start taking vacations and there's not as much going on. Like a lot of the selling occurs, seasonally in September and October, and we're just getting past, those super weak seasonal months. My trend model that I use, I grade the market on a scale of -3 to a +3. +3 means we're in a really nice trend. My trend model is still at a +3. But yesterday and today, I was a net seller. So yeah, like, and basically I think the question we all have to ask ourselves is, as traders, like most people that I encounter, the reason why they don't make money as traders is like typically their equity curve has like this yo-yo pattern where they make a lot of money on the run up, and then on the run down, that's where they pretty much give it all back. And the reason why is pretty much because every day, like say if you're an options trader, it's like, okay, I'm buying calls today, I'm buying calls again, more calls, more calls, more calls. And then by the time the market is super extended, that trader has the most exposure on, and then they get into trouble. So for me, like, I was just kind of looking at, where I am in the month. And I was like, hey, this is a great spot. We have Fed Wednesday coming up next week, and that's likely where the Fed's going to announce their taper. So for me, I was definitely a net seller today. Really what I just tried to do is I took a lot of the leverage out of my portfolio. So like I was pretty levered up with options. And I was like, you know what, I'm just going to close out some of my options contracts, convert some of this to common stock. But that being said, yeah, the trend is still up.
Interesting to see, that the trend is still moving, even though as you are a net seller. But just because you're a net seller doesn't mean that you're short the market. It just means that you're taking profit, right? And well, hopefully taking profit or cutting losses. And nobody ever went broke taking profit. So, you can be a net seller in a positive market. Absolutely. Appreciate that, Andrew. All right, keeping the ball rolling. Sarah, would you like to go next? Would love to hear your thoughts, especially on how SPY's been performing.
Hey, yeah. So kind of to touch on what Xavier was saying, how just crazy the dip buying has been and how extended everybody thinks it is. I say that because I feel like that's an opinion. So that's one of the reasons why I quit using RSI personally, was because it kept giving me a bias, like, oh, it's too extended. And you guys know I've been like screaming outside bars for 2 months. And it's kind of funny because I was looking back, just because I'm a chart nerd, I was looking back in the history of the SPY, and I went all the way back as far as my chart went, which was 1939, so like close to 100 years. This was only the second time in SPY's history we've ever had back-to-back outside months, which was really cool to see. And what outside bars do is they show you how aggressive the dip buying is. We take out the lows and then we go straight back up to all-time highs. So that was kind of my target for SPYs and Qs, was to make a new all-time high. SPYs did that a little while ago. The Qs pretty much did it. They were like 7 cents short or whatever. So now's my time where I pull back, because what I expected happened. Now we're back up at all-time highs. We have no previous price history. So now is kind of the time where I will slow down, take my foot off the gas. Oh, I also wanted to congratulate Xavier on your Tesla trade. I saw saw that and almost fell off my yoga ball. So huge congrats.
Thank you.
You're welcome. So yeah, so now since we're up at the all-time highs again, this is when you want to pull back. You don't know what's next. We have no more price action. There's shouldn't be too many shorts left, since the market keeps going higher. So now we'll just kind of wait. We're also getting towards the end of the month. So I don't know, just kind of going to let November open up and see what they want to do with that.
Okay, so are you you're hesitant right here? You're waiting to take a position?
Yeah, if anything, I would be looking short now. So
Wow.
I would not, was not looking short until we made new highs. So SPY's done that. Like I said, the Qs came within 7 cents, NQ within a few bucks. So that's when we kind of call it all-time high exhaustion risk, which is not necessarily it doesn't mean it's going to break out or break down, but it could do either. So that's why you want to wait. You don't want to just pick a direction, because it could do either. But since we have gone straight up all month, I mean, the odds do favor a correction in the short term.
Okay, keeping our eye on that. Somebody had asked, do we see a tech crash coming? So I think maybe that's something that we'll focus a little bit more on as we get into this.
Cool.
Uh, All right, let's go to the man who's been on Spaces pretty much all day for like 3 days in a row. I think he even left the space open while he was sleeping. Gavin, what's going on, man?
Yeah, what's up, Wolf? I think I read the name of the room wrong, so my bad. But talking about the market, I'm still bullish. Some people might be bearish here, but I think SPY will run another 6 to 7% before December ends. So I still have my triple leverage ETF. I have my UDAO, T triple Q, and XPX also. Expect another leg up here, especially for large cap here.
And I guess, are you looking at the historicals? Is that what you're focused on in this being a great month? Even though, so I guess we're at all-time
Yeah,
highs.
usually,
Yeah.
yeah. This has a lot more room to go. I don't see a correction before March of next year.
Why is that?
I can't tell you, but I can just share you in the private.
Okay.
But you won't see a pullback more than 5% before March. Write that down and tag me, and put a reminder for March of next year. SPY won't dip more than 5% till then.
Somebody tweet that with the at remind me and tag me and Gerg, please.
Yeah, just tag me and say SPY won't go down 5% from the highs till March 15th of 2022.
All right. Well, I'm going to keep my eye on that. And listen, I sure hope so.
Yeah, but right now I've been focusing mostly on SPACs, right? So SPACs having free money. Did you guys play back yesterday? It almost went up 500% from the lows yesterday. And even today, what did you have? The face pack, BRPM. I think I was playing that with Evan, right? Evan, are you still in that?
Yeah, I'm
I'm
still in
not.
it. It's closer to where I bought. Sorry.
Yeah. So this was SPAC. So the deal came around $10. I bought at 10.50. With it being a SPAC, my downside is 5%. And Face is a household name, so I expect $15. And what happened? It went to 50%.
Yeah.
And expect the same thing to happen tomorrow too. So tomorrow, watch AGC. So these SPACs, right? The downside is limited. So when you buy 10, 10, 10, 50, the most you can lose is 5%, 2%, 3%. So right now, focusing all my money and energy into these right now. I bought the new CTX pack today. It's like half of my portfolio. Why? Because my downside is 1%. You can't find these plays anywhere else. And for tomorrow, keep an eye on RBAC. So if it runs 50%, I told you guys.
Well, there you go. Keeping a couple on my watch list. Perfect. Cool. I'm going to go to you, Andrew, quickly, and then keep it rolling with Mel after that.
Yeah, so some of these, as Gergen was saying, the SPAC market has been crazy. And, as we talked about in our last meeting, a lot of these areas of the market that have been super underloved are now starting to get that love in Q4. And SPACs is one of those groups. So I talked about last week how the IWM small caps, that's one of my big positions. If the small caps continue to move, that's where you'll likely see the SPACs get some love. But some of these SPACs, they're doing crazy things. Like I got long the one, it was like BKKT, it was a crypto SPAC, and they had the MasterCard news. And that one yesterday was up like 184%. Overnight it was up, it like doubled again. And yeah, I think what we're seeing now is like, it's very similar to what Xavier was saying, how it's kind of similar to what we were seeing last year, where the speculation is really coming out. Like, for instance, Tesla. If you were in it with calls, I have a common stock position. I was not in it with calls. Like, if you had calls, you are awesome. Like, you probably made like some really good change the other day. But with Tesla, one of the things I was seeing was yesterday, when it had that big move, we broke the record for the highest number of Tesla calls traded in a single day. And what was interesting about that was about half of those calls traded in the October 29th expiration. So really what that's telling me is, that's not like institutions, buying Tesla, like, we see the fundamental value in this name, let's add a position. That's really like probably like hedge funds and speculators, that they understand that gamma squeeze strategy, and they're using the weekly calls to just squeeze it higher. So those are the kinds of dynamics I'm starting to see, where like I literally made like 72% in the BKKT, like literally like overnight. And so for me personally, like, once I start to see those things, that's why today I was like, yeah, I'll be a net seller. Like, no worries, because yeah, if it keeps going up, that's great. But I think the risk definitely starts to get a little bit more elevated, once you start to see those dynamics where it's just like, the speculation is really crazy.
Yeah, that definitely makes sense. And the speculation has run rampant. And I agree with you. I saw those Tesla calls. That was something I was following yesterday. I've stated this on Spaces once or twice, but basically, the big trade that I missed was yesterday morning. I was on Spaces with Stock Market News hosting our weekly space, and we were talking about live trading, and we were doing a trade of the week. And I was looking at Tesla calls, and I was looking at Tesla was at trading about $950 at this time. And the 950s were just really out of my price range. I mean, they were thousands of dollars per contract. And then the thousands were pretty expensive, around $800, $900 per contract. But they must have been looking at the, 1,000 mark and seeing strong resistance there, because I was looking at the 1050s and they were about $300 per contract. Massive, 60 to 70% drop off from the ones before them. And I did not take them. You miss some. So I'm looking at them and I go, oh, those are great. Those went from $300, per contract up to about $2.5 grand per contract by end of day. Which, I don't think I would have held that far. Probably would have sold after the first couple 100%. But it's, an opportunity, and I think it's a learning experience. And that's why I love coming to these spaces and listening to you guys, where I kind of hear some of these opportunities, and you can see them form the next time. Because if you don't continuously get into it, you're just not going to be able to catch them. And you can also not do that style of trading. You can trade longer term. Technical analysis in this market sentiment can focus on very short term 10-minute trades, and can also work for much longer term. All right, let's keep it rolling. Xavier.
Yeah, so you asked how I use ChatterQuant, right? This is it. So for me, I caught that BKKT. I didn't even know what it was. And honestly, me on a short-term perspective, I really don't know what 50% of the things I trade even do, or I don't even know the name of it. I don't care, right? Point of the matter is if it pops up on ChatterQuant with a lot of chatter, and what they have right now is called momentum alerts, that means people are talking about it and they're buying it, right? So anytime it pops up like that, I add it to my trade idea scanner, and if it meets my criteria, I automatically just get in.
And where do you find that in there?
So if you go to ChatterQuant, there is a thing, a little column to the left. It's called Alert Center.
Yeah.
Click on that. This thing is called Pro Alerts, and right under that's called Momentum Alerts. And then you just hit subscribe, and it opens up a little window.
Awesome. I got that turned on now. Perfect. All right. Thanks, Juicy. Mel.
Kind of have the same sentiment that a few of the other panelists have. I think we need the breather. We have a momentum, but we also have just such a huge ER week. We're just really starting to kick off some of the bigger companies that are reporting this week. That's going to be really imperative, and it does make it a little bit challenging. Just making sure you're staying in line and aware of the companies that are trading, as well as those that may also move within the same sector. So as you have that, so for example, one of the ones I'll be looking at tomorrow are the solar names, ENPH, reporting well this evening. But I'm not necessarily, I think a healthy consolidation and pullback is really what would be great to see. Would like to see some new names coming about. Bases formed, hold those strong moving averages, but I'm not necessarily sure that we're going to be pulling back too far. Flow's been really mixed on the indices, but that's typically what you'll see, especially on this kind of ER week, because you have repositioning, you have hedges often in SPY for larger portfolio positions in some of these tech names. So I'm just going to kind of plan to just kind of day trade, make my list, check it twice, make sure I'm getting optimal entries. for any new longs, but would like to see and welcome a pullback here.
Okay, seems like that's a little bit of the common theme. Opportunity, but definitely cautiousness and willingness to buy on a pullback here. So I think, maybe similar to if you just are looking at SPY, anybody that has it pulled up, and for anybody who's like listening to us talk technicals, we might use things like anchored VWAP and moving averages. I know that I personally use TrendSpider. I think a lot of others in here do use TrendSpider as well. I know Danny does and some others. So if that's something you're interested in, you can definitely check out TrendSpider. I'm not paid to say that, but I do have a discount code if you want to sign up for their services. And feel free to DM me for that. With that being said, I'm looking at SPY right now. And on the SPY chart, if you go back, we just had that small pullback where we were doing spaces through this whole time. And I think there was similar cautiousness through this pullback where I guess around October 4th, we hit the low of it. And since then, it's, moved a good amount upwards. And I'm just moving some stuff off my chart. So now we're back near those all-time highs. Again, where Sarah mentioned there's no price action. We're not too far above some of these moving averages like the 50 and the 100, but certainly, that has its pros and cons as you can, use those as support, but also fall through them and then they can become resistance. Okay. All right. Vegas, I would love to hear your thoughts.
Hi, everyone. Thanks for joining us. And I want to say happy birthday to my dad and shout out Ty Dad. He's listening tonight. So I want to welcome my dad to the show. And the market's been wild. I mean, Tesla was really wild in the last couple of days. And especially huge congrats to Xavier on that amazing trade. That is definitely phenomenal, and all from options. And it just goes to show you that even like small accounts, I mean, we did swing trade on Tesla last week for the $1,000 calls around $1.50s. And a lot of people I know did great on those and sold them for over $1,000 plus each. And who would have thought that those went to almost $10,000? Almost, I think, $10,000 a contract. So what a beautiful move. But, the market, I mean, it just keeps going and going. And so I think a lot of charts are kind of digesting, and a lot of consolidation, I think, is kind of setting up as well. And I've really just been watching these earnings. I know it's been a busy week with earnings and a lot of big companies releasing those numbers. So kind of been watching, how did those play out and how is the market responding, especially that, AMD had the earnings tonight, and so I don't really see a big reaction there. And then we have Lisa Su tomorrow morning, so I'd like to hear what she's going to say and kind of see how does the tech sector react. I know they did mention that they did raise guidance for Q4. Earnings beat by 6 cents, revenue beat, but in terms of the actual performance of the stock, even after hours, I really didn't see much of a market reaction. So I don't know. We'll see tomorrow how it does pre-market, but I know she'll be on CNBC tomorrow around 9:15. But really surprised that I didn't see any kind of pop tonight, but it could change tomorrow. So I'm just kind of watching how things are going and watching for some things to consolidate as well. So it's just I'm just observing a lot of things right now too. I haven't bought any puts yet, but I'm kind of on the same page as Sarah. I like her comments about, now is kind of a good time. A lot of things are at the top, and and we know that it's not going to keep going up forever. I mean, you can't have every day going up and up and up and up and not have any kind of pullbacks. So definitely think I liked her suggestion. I think I'll definitely be looking into that for some of these setups that have had a huge run up.
Absolutely, yeah. Keeping my eye on that, and then a couple of those names that you just mentioned, AMD, Tesla, and I'm keeping my eye, I guess, on AMD as well in the after hours. I hadn't looked at that just yet. Okay, down a little bit after hours. Those are some which I know our good friend Exclusive, who just joined up, has been big on this week. He made definitely some big money over there. So I'd love to hear your thoughts, Exclusive, on, what's been going on in this market. I know this was probably, one of the best weeks for you. Although I won't assume, because I know you're a good trader all around, but I know you were on fire. And we were messaging a lot. So what's been your thoughts on everything that's going on? And are we perhaps nearing a top? Are you continuing to roll up in these calls? What's going on?
Yeah, definitely a crazy couple weeks. Uh, First of all, thank you for having me. Shout out to everyone on the panel. Great speakers. Make sure you give everyone on the panel a follow. Great information. Always looking to absorb. I'm a little bit late today. Sorry about that, but yeah, no, I'll just kind of dive right in. I don't really know what's been covered so far, so if I repeat anything, I do apologize. So what we're most excited about, of course, like everyone else, Tesla, one of the bigger moves that we were anticipating. I know we got a ton of DMs. We posted the charts ahead of time last week. We've been playing the roll-up game for the past 2 weeks now, and we kind of went into this week anticipating the move just a little bit above 1,000, and then the news comes out, and just like we always say, whenever there's a technical break, there's always some kind of company news or something that comes out that just kind of sparks even more volume, more FOMO, and then it just keeps on going until it gets out of control, and you just secure gains and just keep rolling up and making more money. So yeah, definitely had a couple of trades on Tesla that broke what the 980s and $1,000 call swings from last week. Of course, those broke the 4,500% returns, which is life-changing money. So definitely really more excited about members and people on Twitter that just follow the chart posts making this kind of money. It's really rewarding seeing other people succeed. So that's what we're most thrilled about. And I've even started talking to some of the panelists here, and it's really good collaborating with people that are trying to empower retail and give free content out. So definitely looking forward to doing some more of that. So we were really bullish on Nvidia, and we even got a couple of we got some pushback on the PTs that we had listed. A lot of people were saying it was overextended. There's not really going to be much move if it does make to 230. It's not really going to go further than that. And you have to remember to look back and kind of zoom out to the daily, weekly, monthly, and sometimes yearly charts and see where those huge levels and major pivots on the yearly and monthly really make a difference to see where the market sentiment is when those levels start to come into play. So we saw coming into this week and ending last week, we saw that rejection at the 231 level, which was a really, really good sign because that was a mid-channel from that major uptrend for this year. So we were really bullish going into this week on NVIDIA. And I know there was a couple other people last week that spoke with me about NVIDIA as well as AMD and, the semis as a whole for the SMH. So, we were really focused on that sector going into this week. So we posted some PTs on NVIDIA, and I mean, my goodness, it's great to see the 235 extension levels, and I mean, it touched perfectly to the price targets that we had listed at the 245. So we're in all-time high territory, and we're not even to the top of this uptrend channel. So as long as the SMH can hold up, and as long as the market sentiment remains slightly bullish, I know we're extended, but as long as it holds up and the bears don't get the upper hand, we can still see some more room to the upside. So we're still bullish neutral going into the rest of the week. I think the only thing I've turned slightly bearish on is Netflix. That's obviously a really overextended stock, and I know it kind of did a little bit of a rally into the close. I do have a short position on Netflix weekly, and that's really more of a lotto with profits as we anticipate some pullbacks in sympathy with, competing names like Roku. So, inevitably, when one goes down, the other one eventually, something happens and people start to sell off and people take profits, and then eventually gets to the point where it starts to capitulate, and then, you start seeing those bigger drops, which is exactly what happened to Tesla today. But on the bull side of that kind of drawback, that provides a really, really good entry for a dip buy, which is exactly what we did today. Once we got near the $1,000 level, we re-upped on our $1,000 calls, got some 1050s and 1100s, and scalped Tesla for another couple 100%. So, congrats to those people who followed us on Twitter that saw those charts being posted in real time. No, that was absolutely free. So, more power to retail. what we're going to be looking for going into tomorrow is we noticed a lot of, the energy and EV sector is really hot, and we're still at these high levels, for the SPY and SPX, NASDAQ, Dow. So we're still playing it very, very safe. We're only swinging positions overnight that are at least scaled out half of the position, and we're not risking any original capital. So, the only things that we have swinging for the weekend, I'll kind of go through my trades real quick. We had some Etsy that we claimed some profits on over 100% today that we're swinging through the rest of the week. We have 250 strikes on those. We're playing longer swing for November on Simon Property Group. We posted a chart on that as well. Got a little bit of a pullback, but again, for us, we already scaled out yesterday, and then today we took a little bit more profit before it pulled back. So that's another position we're pretty good on. Coin was a toss-up. We got over 100% on that already. But of course, when crypto pulls back, coin pulls back, and the overall sentiment with, crypto-related names and Bitcoin-related names kind of pulled back, which is inevitable. When Bitcoin nears these all-time highs, of course, you have profit takers, and, the sentiment shifts a little bit, even if it's temporary. So we'll look for a dip on that to enter. We've also got some Salesforce, ticker CRM. We've got some 300 strikes for the week that are up 250% plus. Those are paid runners, as well as Moderna. And I know I talked to Juicy Trades about Moderna yesterday, and I was looking for that gap up, which filled the gap perfectly today. So we're looking for some continuation on that with some of these COVID names. Just EVs and energy. We posted a couple charts on Twitter, so if you want to take a look at those, definitely some good information there. And if anyone has questions, I'd be more than happy to answer.
Perfect. I'm definitely going to dive into more of those specific names in a moment. Real quick, the last person who hasn't spoke is you, Evan, Stock Market News. Would love to hear your thoughts on what's been going on with the market, and then we'll go to some hands, some specific names.
Yeah, so I appreciate you for having me. So just one thing that I quickly heard, a couple things as we were going, but with AMD, I think it's a perfect example of why you shouldn't trade around earnings. Like, I don't know who was saying it before. I think it was Vegas. But the quarter was a solid number. They beat on both EPS, revenue. They beat on most of their numbers. They raised forward guidance above current expectations, and the stock didn't really move. So that's an interesting one. Just looking at the stuff in a vacuum, I would have expected it to move higher decently. So that's an interesting thing. The last couple of days in the market have been pretty wild, at least from the perspective of, like, we kind of had a little bit of the meme energy come back into it, whether it's a couple of the SPACs coming back into play, Tesla running up a crazy amount, and a couple other stuff. But it was just a fascinating week to see us kind of pumping back up to all-time highs. I personally, I definitely get where a lot of the people who are positioned or thinking a little bit more bearish for the short term. I personally think we might have a little bit more of a way to go higher for a little bit of time into the end of the year. We'll see. Nothing goes up in a straight line, and we could see a nice pullback. This isn't like my short term, whatever isn't my expertise. There was a while where I kind of slowed down / stopped my buying, a month or so in there, and I've definitely started to repick it back up again. Nothing too crazy, but dollar cost averaging as always. Whoever was talking about Nvidia, I love that company. First time it closed above $600 billion was today, so that was pretty great. Gerg was talking about the phase SPAC, which was something I bought into, BRPM. That's one thing I'm interested to. It's a SPAC. Like, I was able to get in close to 10, so I feel pretty good about it, as he was saying earlier. Hopefully it could run up. We'll see going into it. And then, like, there's a couple of other positions that even as we're running to all-time highs, a stock like PayPal, which is 10 to 15 or whatever percentage points off its all-time highs because of the whole Pinterest news and stuff like that, I saw possibly a decent opportunity in. So, we're starting to get a little bit extended, maybe at all-time highs, but earnings seasons has been pretty solid so far. Today was a really big test for it, so we'll see where we open up tomorrow. Overall, I think we might be setting up for that normal end of season ramp. Hopefully.
Definitely hope so. Awesome. So going to move to you, Andrew, in just a second, and then to Danny, and we'll go into some specific names. I'm going to put out a tweet, I guess, in just a second, and I'll just kind of tweet like, what names do you want us to talk about? That way, if there is something specific, you can drop it under there, and I'm sure Danny will probably chart it within like 3 seconds. Vegas, will definitely throw some in there as well. I'm sure, they're definitely amazing charters. So be on the lookout for that. While they're answering all those, you might as well follow them. They're amazing. Really some of my favorite out here. And I just want to say this real quick. If you're enjoying the spaces, Twitter Spaces makes it very difficult for people to find out when all spaces are going to be, right? They only allow us to put out one reminder ahead of time for a space. So, for example, I had a space at 6 p.m. today, so I couldn't put out like a Twitter Spaces reminder link from this 8 p.m. space until that one ended, which was 20 minutes beforehand, so it doesn't help. So to counteract that, I made a free public Google Calendar. All you have to do is DM me your email and say you want to be added to the calendar, and I will add you. There's hundreds of people on there. Nobody sees your information, and that way you'll always know, and I keep that up to date with all the spaces, and I did 12 this week, I think. I did like 14 last week, so you'll see those spaces, and you can just toggle that on and off at any time, but at least you'll have the opportunity to see them. So feel free to DM me that. That is all. I will add you to it tonight if you do DM me. With that being said, I'm going to go to you, Andrew. I see your hand up, and then I'll go to you, Danny, for some individual names, and I'm putting out this tweet as we speak.
Sounds good. Yeah, along with what some panelists are saying with the EV theme, I'm seeing that same theme coming up. So I'm noticing two themes that are really emerging. We have sort of like a clean energy, EV companies, and then also financial innovation. So last week on this meeting, my main pick was AMD. And AMD, I had some long calls. I sold out of those calls before the earnings print. And with AMD, like the reason why I really didn't have such a great reaction to the print is because it kind of went, like semi-parabolic into the print. So a lot of times, like, traders, they'll be like, why didn't the stock go up after the earnings print? Like, what's going on? And usually that's because, institutions were positioning it into the print. So then even if the print comes out pretty solid, which AMD's definitely was, they beat by, a pretty small margin. A lot of times you do get a little bit of selling that comes into the name. The name that I'm really looking at for tomorrow, so I was looking at all the earnings reports. Microsoft came out pretty good. A lot of these tech companies, they're either missing their earnings or they're beating their earnings by like a very small margin, like literally by pennies. And a lot of these tech stocks have really run. The one that caught my eye, and I entered a starter position in the after hours, was Enphase. Enphase is a solar energy stock, and their earnings actually beat by a reasonable margin. So they reported Q3 EPS of 60 cents, and the estimate was 48 cents. And they reported sales of 351 million, and the estimate was 343 million. And then they raised their sales guidance. So for me, like, I start to look at this, I'm like, okay, I see solar energy stocks starting to get some momentum. It's the end of year rally where some of these unloved sectors of the market are moving higher, and Enphase just ripped their earnings report. So I picked up some shares in the after hours market, and this is one that could end up forming a power earnings gap setup. And I'm looking in the after hours movers, and I'm seeing a lot of these other solar stocks moving in sympathy. Yeah, so I really like Enphase, and really just that solar energy ETF. Ticker symbol is TAN. And that's, if the stock performs well, I just added a starter position after hours. I'll probably add to that position.
Awesome. Awesome. Yeah. I used to have some Enphase. It was actually a while back. I did sell all the stock after a little while. I was just getting, I think it came back maybe when I sold, because if you see the stock has been up and down, a few times. Yeah, I got out on August 9th, which was basically near where it just got back to now. So, hey, maybe there's re-entry opportunity. Keeping my eye on it. Also, to my speakers, I did my best to make sure tonight's panel was a little bit smaller than the other one. So I'm going to ask that if you do, I want you all to be involved. Please just raise your hands. That way I just, know if you want to get speaking and everything, you have a point. That would be awesome. But Danny, I'm going to go to you because I know you threw out a bunch of charts today. And also, I put out a tweet, like I said I was going to, asking what stocks people wanted us to talk about tonight. There's already 14 comments on it,
Awesome.
so hop on over there and definitely drop anything that you want us to talk about. But yeah, Danny,
Yeah,
go to you.
perfect. I'll definitely take care of that as soon as I finish up there. So I'm going to go through this a little slower because there's a lot to go through, and I want people to hear what I'm going to say. As far as the indices go, and I look at indice first, what is moving, that's on my list, and then I dive deeper in terms of what is going to be my number 1, 2 picks off of that. So I'll echo the sentiment about TAN. TAN right now, the solar ETF, is right at the year-to-date anchored VWAP, right at 93.37. If that breaks above, watch for solar to run. Top holdings are EMPH, SEDG, and RUN. The next one that kind of piqued my interest that I haven't been watching, but it's on my radar now, is the real estate sector. The spider is XLRE. Top holdings are AMT, PLD, and CCI. That just made a beautiful V-shaped recovery. It's been running for about 2.5 weeks, coming up to all-time highs now. Another one is healthcare, XLV, so Johnson and Johnson, J&J, UNH, PFE. Another one that's been running for a couple of weeks with SPY, also coming up pretty nicely. We talked about clean energy, ICLN, finally starting to break out of our chop range that we've been in since March. Looking at, let's see, EMP, no, that's, EMPH is also in there. Plug Power, PLUG, and Next Era Energy, NEE. Next up is XLE. So that is your energy ETF. Nice cut base that broke out over 56.70. That's been running. That's going to be ZOM, ExxonMobil, CVX, Chevron, and COP, ConocoPhillips. So your traditional oil plays. We've been talking about oil to 200, possibly next year. I still think we're on track for that. And then the last ETF or sector I'm looking at is financials. So the one concern I have on financials right now is we have been running, but we had we had a spinning top yesterday, an inverted hammer today, right at the 1618 Fibonacci extension from the prior swing high, swing low. So if everybody knows how I trade, I play Elliott Wave, I play Fibonacci, and I play patterns. And so what I'd be looking for is still some consolidation and resistance here on XLF. However, if we break above that, my top play is going to be Goldman Sachs over 420. Now, just to touch really quickly on individual names, I do love NVIDIA, although I feel like it's extended with a 2-day massive breakout. Microsoft called that 2 weeks ago, massive day today with earnings this week. DKNG has been hovering around $50. There's been trickles of news coming out, so keep an eye on that. Crowd has a beautiful broadening formation. That looks like it wants to run a little further. PLTR has been waking up. It's just over the year-to-date anchored VWAP right now with a channel bounce. TTD still in its massive inverted head and shoulders, still looking pretty good. Talked about Goldman Sachs. Tesla, I think Tesla's going to 1,500 early next year. Right now, it's in a wave 3 of 3, which is going to be your longest wave in Elliott Wave talk. So I think 1,200 and then a pullback and then possibly 1,500 early next year. AEHR, talked about that last week. That's finally breaking out. UPST called a 400 top, 300 pullback. That's happening right now. And CELH, one of my traders from the room just messaged me. Looks really good on the daily and the 65-minute. It's been hovering right under $100. I'm going to be watching that in its bull pennant to be breaking out either this week or next.
Wow, quite the arsenal you have there. All right, I'm going to ask a couple quick questions onto some things that you mentioned there, which I hope some people in the audience find helpful. Okay, so first one is going to be the 3 things that you mentioned you're using for finding these charts and these breakouts are Elliott Wave, Fibonacci, and patterns. Can you give me like 20 to 30 seconds on just kind of what each of those are and why you use them?
Sure. So patterns are basically what you're going to be looking for on a chart as far as a setup. So that may look like a cup and handle. That might look like a pennant or a wedge. It could look like an inverted head and shoulders. And there's a great book by Bulkowski, The Encyclopedia of Chart Patterns. And he goes over the historical success rates of each of these types of patterns. And there's more patterns out there, but very much like Juicy, I know what works for me, and that's what I trade. In terms of Elliott Wave, that's something that I've been diving deeper in the last 12 to 18 months. It's more of a theory of how the market moves in waves. And this can happen on a micro scale, 5-minute chart, to a macro scale, a monthly chart. And generally what happens is a stock may move in a wave, like it'll have 3 impulse waves up. So you'll have wave 1 that pulls up, wave 2 pulls back, wave 3 goes up, wave 4 pulls back, wave 5 goes up. And then generally that's your top. And then you'll get some sort of corrective wave down, either in an ABC correction where A comes down, B is like a relief bounce, like a dead cat type bounce, and then C wave will come down. And then I use Fibonacci, which is, it's hard to explain exactly what Fibonacci is, but it is, you see it in everything. It's in your ear. It's in a flower. It's just a law of a pattern that is constantly around. The circular universe is in a Fibonacci pattern. It's an expansion pattern. So each number, I believe, doubles as you go higher. And I use that because it's really accurate. You'd be so surprised how I can call a top and how I can call a reversal. It's not always perfect. Sometimes it's perfect, but usually they play out in the 618, which is the golden ratio, so 0.618. So generally pullbacks will happen to 0.618. Extensions on breakouts will go to the 1.618, and so on and so forth. It's way too much to explain in 20 to 30 seconds, but I've written some pretty good Twitter threads. I'll try and post them later. That goes over the basics, and then in those threads, I also recommended some books that you can buy if you want to learn more about it. But like anybody else out there, if you really are interested in learning how to trade, you got to start with the charts first, and then once you master the charts, there's a whole world out there that you can learn about, from the strat to Fibonacci to Elliott Wave. You just got to find what works for you, because what works for me isn't necessarily going to work for you. But whatever works for you, whatever works for your market psychology and what your brain can absorb and handle, that's the way you should trade.
Wow. Incredible, incredible. It's times like these that I'm very grateful that we have these recorded. To be able to reference back to something along those lines that I think are really useful for the audience. And shout out again to Wade, who is recording. So thank you for that, Danny. And I went through some of those names. I love these setups. I mean, this Goldman Sachs setup that you enunciated a couple times looks really good. I've been kind of charting that one while you've been talking. And I'm excited to hear some of the other panelists' thoughts, and maybe they have some overlapping with some of those. But first, I want to go to the Soldier Spaces this week, Stock Talk Weekly, who's been just riding it out as you're having one of the best trading weeks of your life, I think. How's everything going, man?
It's going great, man. Yeah, I mean, for me, the last 5 sessions have been. I mean, I've never had these kind of gains in the last 5 sessions. I mean, I don't expect it to last as somebody who's been trading for 10 years. Like, these kind of explosive, sentiment surges don't really last, and so I try to capitalize on them while they're there. But I mean, the last 5 or 6 sessions, there have just been so many really good opportunities in pre-market, which I kind of discussed earlier about just assessing volume pockets in pre-market and how to predict what are going to be, regular session runners. Today a big one for us was BRPM, or actually, is that even the ticker? BRP, whichever one was merging with Phase. But I wasn't even in that ticker, and then I was just monitoring the pre-market volume, and just watching how the bid ask was reacting to the volume surges. And I kind of just anticipated that there was going to be a volume surge at open. It worked really well. We got in like 1180 with a lot of size, got out in the 15s right at market open. It ended up flushing after, right? But that's expected when you have that, because that kind of volume isn't sustainable for the whole session. But I mean, that play, fun, was another one. And that wasn't as much a volume play. That was more so just a sympathy play. But yeah, there have just been very hot runners, and like sentiment is pooling on a lot of these small and mid cap names, especially the ones that have decent catalysts. So yeah, it's been an excellent week. We've been doing those Twitter spaces, 8 to 12 hours a day. I've just been kind of doing them live while I'm trading and, answering questions. But yeah, it's been a very amazing week, life-changing week for me, for a lot of people who have been in some of these crazy runners. I mean, we've had, I think, 7 or 8, really popular names run between 500 and 2,000% in a single session, you know, within the last 5 or 6 days. And, of course, you're trading options or warrants, you can get those kind of gains, but seeing those kind of gains in underlying equities is just extremely rare, in my experience. And so, the market's hot right now, at least, in certain parts of the market. Overall, the indices aren't just like roaring or anything. That they've been doing well, but there's pockets of the market that are just really outperforming, massively outperforming, I should say, the rest of the market. And identifying those sectors, for me, that's my bread and butter. Like, that's why I constantly trade different types of stocks, different sizes of stocks, different asset classes. I try to be flexible to be able to seize opportunities when I see them. But yeah, I mean, just an excellent week. Um, that's really all I have to say. I mean, it's been a great week.
Yeah, totally. Is there anything on, we're talking individual stocks now. Is there anything on your radar for the upcoming days?
As I see like sentiment surge like this, because I know it's not sustainable, what I do is like, most of these names I'm trading maximum through 2 sessions. A lot of them I'm just day trading them. I generally don't feel comfortable holding, 500% runner overnight. Typically, obviously there's cases of continuation, but typically, you're going to see those names taper off, especially volume wise. A lot of people don't understand that about, price per share versus volume. Like, when you do 500 million volume on a $10 stock and that stock runs to $30, sustaining that volume in the successive session becomes more difficult, right? And that's just basic logic about it's more difficult to recruit aggregate volume when you have a higher share price. But so paying attention to trends like that and just trading in and out of them. But what I start to do as things get this hot, usually these kind of explosive sentiment trends don't last more than a week or 2 weeks. So I've been funneling all my profits personally into, what I call bank account plays. And so for me, those are net asset value SPACs that are trading close to $10 that have the floor protection, and obviously I don't hold those names through merger, but I find ones that I think have near-term tailwinds or have some kind of fundamental story that's potentially appreciative. I load them in the 10 to 10-15 range, just dump all my profits into them, and then see what happens. So for the last 2 weeks, I've been dumping my profits into SEAH and XBDI. They are now up off of NAV. Both of them are up between 15 and 20%. So I mean, for a bank account play, for me, just dumping my profits in there and these stocks are running 15 to 30%. I mean, that's phenomenal. And a bank's never going to give me those returns. And so, that's the kind of the strategy I try to use is when I see these explosive trends, I try not to get caught up and lost in the sauce, if you will. I try to, stay focused, and I'll continue to trade those momentum trades as long as the volume's there. That's all I really care about. If the volume's there, it's tradable in my opinion. And so, I trade some on the upside, some on the downside, but I keep stowing away my profits into some of these high conviction plays. And so for me right now, those are RDW, SEAH, XBDI. RDW doesn't have the floor, but I feel like it's a safer play, and I've been putting money there since the 8s and 9s, largely because the 424B3 filing is expired. Most of the pipe selling is flushed out. There's not a lot of downside risk. Again, good fundamental narrative, really good near-term catalysts. So those are the kind of plays I like. I don't want to call them safe plays because nothing is perfectly safe. But if you're buying a SPAC within 5 to 10 cents of net asset value, it is essentially a bank account until the merger is complete. I mean, there's no way you can lose money on those plays because you can just redeem, even if the SPAC does for some, whatever reason, sell off to the 990s, you can redeem at 10 to 10.15 for most of those names. So, I mean, it's really just completely tempers your risk. And, on the upside, if people find those net asset value plays and buy them for whatever reason, XBDI has been running because it's a Bitcoin mining play, and SEAH has been running because there's a lot of sportsbook hype, and people have been kind of discovering it has a really good valuation versus peers. So when you have you don't even have to have a crazy thesis, but when you have some cause for some of these like net asset value SPACs, you have a decent fundamental narrative or decent catalyst. Dumping money in them at net asset value is just an easy revenue generation play. And so I've been keeping profits there, and just protecting my gains that way. I'm never in a hurry. I think a big thing that new traders get lost in is, once they make, 5 or 6 home run plays, they get very anxious to find the next one, and they end up giving a lot of those gains back. Over the course of the years, I've done that in my earlier years of trading, but at this juncture, I don't. When I make big gains on fun, for example, like a 2,000% overnight runner, I could have taken those gains and dumped them into 5 different other momentum plays, and I probably would have given a lot of it back. Instead, I put it into net asset value SPACs, and I got another 15 to 20% on top of those already massive gains. So capital management and capital allocation is a huge part of staying, not only protecting your capital, but staying vigilant of your opportunity cost, and allowing yourself to generate liquidity at any time. Like if I see a new play I'm interested in, I can just sell out portions, because my net asset value positions are generally very large because there's no risk. So I dump a lot of capital into those positions. So if I need to generate buying power, I can easily just go in and sell shares of those NAV SPACs to generate buying power, the same way you would withdraw money out of a bank account. The only difference is a bank account's not going to give you 20% gains in a week, right? So this is the kind of the strategy I've been using is, playing momentum runners, playing these high volume names, taking the gains and stowing them away in these NAV SPACs. And if they appreciate in the meanwhile, I mean, that's just a cherry on top. So that's kind of the way I've been trading over the past few weeks. It's working really well for me right now. I think going into the end of the year, you're going to continue to see strength in small caps, barring any big policy narratives that change. I think the tapering thing has kind of just been accepted by most of the market. I'm not saying we won't see a correction when it begins. I think we will probably see some downside sentiment in the market for a few weeks when it begins. But knowing that interest rates aren't going to be really a topic until the end of next year or the beginning of 2023, I think small caps get hot going into the end of the year, as they usually do. November and December are generally really good months for it. So I'm going to keep using the strategy until it doesn't work. But it's the capital allocation aspect of it and the opportunity cost has been really effective for me.
Love that. And, again, just built for spaces, my man. Always intuitive and interesting to listen to. I have just 1 or 2 quick questions. And then I have a couple of questions. I'm going to go to you exclusive, off what you said. And so the first one was, you mentioned a few tickers, which were the ones that you were looking at. I know the first one was Redwire. You then mentioned, was it CVI, CVR?
Yeah, SEAH. So SEAH, XBDI, RBW. Those are my 3 largest positions right now, mostly because I feel like they're low risk positions. Keep in mind that, when I started adding to SEH and XBDI, they were trading very close to 10. Now they've appreciated rapidly. So, if you're looking at these net asset value SPACs, you only have the floor protection if they're close to 10, right? Like the further removed you get from 10, the higher your downside risk is. So, like for example, XBDI now is trading in the 12s, close to 13. Now you have 30% downside. So that's no longer a safe play, right? For me, it still is, because I have a $10 cost basis and I'm actually bullish. I happen to be bullish on that target long term anyway. So for me, I have the flexibility of keeping my position in there, and I don't really mind if those gains fluctuate, because they're just protected capital that, is from other big trades. And so, finding ones that are at $10 that you like the fundamental narrative behind those companies, that's a better strategy. And there still are plenty out there. I'll be looking for a few new ones in the coming weeks, because the ones that I've been using as bank accounts are now no longer have that protection. So over the course of the next few weeks, I'll be looking into more of those plays.
Definitely, definitely. And then I have one last question, and it's just like 30 seconds for. I think a lot of people in the crowd hear this very often. They hear, I'm going to redeem my SPAC at NAV, and they understand that that's $10, and they might even understand the process of how SPACs formulate and the pipeline. But for those who don't know, how do you go about to redeem those shares if you're going to go ahead and get that back at 10?
So you can redeem them pre-merger. Post-merger, like you can't redeem shares, but pre-merger you can redeem shares. And so your brokerage, it depends on the brokerage, but for those who don't know how to do it, just contact your brokerage. Ask them what the redemption process is. It changes from broker to broker, but essentially, every SPAC. The reason this ability exists is every SPAC has a trust that's full of cash before the merger. After the merger, that that trust gets deployed to the target. But before merger, that trust is there to ensure the redemption of shares. And so, you just contact your broker. The process differs by broker, so there's no specific, step-by-step process.
Awesome. Appreciate that. Appreciate all the info. Mel.
I actually had a question for Stock Talk. Thank you. This is not an area that I'm as versed in, so I do really appreciate your insight. And was just curious if RTPY is of any interest or something that you've been watching, only because there's been really large dark pool activity that came through both today and yesterday. So on average, this one only trades about 758, and we've had about almost 5 million, 6 million shares. I'll post a chart here in a second so that you can see that. Just curious if you had any additional insight or if that's of any interest.
So yeah, I'm familiar with most of the teams, most of the SPAC teams. So the Reinvent Technology team, they've done other SPACs before. It's a really solid team. I haven't looked at RTPY specifically, but thanks for bringing that to my attention. You're saying the volume's been ramping lately?
Yes, I'll actually I'll put just yesterday and just because you're mentioning that $10 level, and again, this is not my specialty, but I just thought it was interesting because we have seen such a rev up in some of these SPACs coming through. But we've probably had almost 5 to 7 million. I'll get a full count and I'll post that and share it in this space. Again, not one that I'm very familiar with, but it's more recent activity. I'm wondering if this will be one that potentially has some follow through if we continue to see the activity and continuation in some of the SPAC names. And I'll post that in just a second.
Awesome. Yeah. My thoughts on that are twofold. So, primarily for the last, for most people who have been trading SPACs, the peak of the hype market was about in February. Most people are familiar with CCIV, which was like the highest volume SPAC ever, or not ever. Well, in recent history, it was the highest volume SPAC at that time. And, there was a lot of not only hype, but, just even institutional interest. And, it ran from 10 to 65 in a matter of weeks. And then you had the valuation shock when the details came out. And as soon as CCIV tanked, the entire SPAC market went into about a 2 to 3 month downturn. And you're still seeing some of the names that got sold off so heavily in that downturn that, are now trading below 10. But, people need to keep in mind that the names that are trading below 10 now are post-merger names, right? As long as a SPAC is pre-merger, that $10 floor is non-negotiable. Like that is your maximum risk, right? Because even if it trades below that, you can redeem. And so, since that sell-off happened, through May, June, July, even the high quality deals that were getting done in this space were not getting volume and attention and price appreciation, because of this fear of there was like just basically an illogical sentiment fear that kind of spread through the asset class. And that was because of how severely, a lot of these names dropped 60, 70% from the highs, the DSPAC names. And so, it just created a lot of fear in the asset class. And, now you're kind of seeing that recover. DWAC helped with that a lot, obviously, because that drove a ton of volume into the asset class. And, with SPACs more so than other asset classes, there's a lot of spillover volume and a lot of shared shareholder bases. So, like people that are trading, one or two SPAC names are trading a handful of others as well. And so you have like this kind of shared sentiment between names that are completely unrelated or completely fundamentally on different ends of the spectrum. And so, that was preventing people from buying these for a while. Now, like I said, over the course of the last few weeks, some of these names that have been sitting at $10, while the deal details have been known for months, right? So nothing has changed. These deal details have been known, but no one was buying them before. And now just recently you're seeing, volume pick up and, now a lot of these $10 names are trading in $11, $12, $13. So, these are 20, 30% gains that for people who are using them as bank accounts, it's free money. And, so I don't want to say that it's going to continue to last, but, I am monitoring volume pockets in a lot of these names. I'm monitoring volume escalation, and a lot of them are not going to react to price because it's very easy to load SPACs, even, big money that's loading them. You can load SPACs without really affecting the price action, especially when they're low volume and trading at low volume for an extended period of time.
Awesome. Yeah, I think that definitely answered the question, but and also it's cool to see the collaboration between the dark pool expert, the SPAC expert going on here. Okay, I want to throw a couple of questions around to some of our panelists as well. So exclusive, I wanted to go back to you, and then Juicy, I'm going to you because I know your time is limited. So exclusive, for these options that you're trading, I had a couple of questions because I know that you're pretty focused in on them and have been getting some real good practice there. Do you sometimes, I'm guessing, like, what's the difference between, I guess, how you decide if you're going to trade comments on something versus options? If you're going to trade comments on something that's running, do you prefer maybe sometimes that there's no options in place, and just kind of like a little bit more around your process than anything else you wanted to add?
Yeah, so for me particularly, so I have two separate accounts other than my challenge. So like I have a challenge account, which currently I'm doing $1,000 account challenge on Robinhood, which is a pain. I can't stand Robinhood. And then I have my primary option account, which is eTrade Pro, and then I have my commons, which is basically my investment account. So when I look at common stock, I look at, 2, 3 to 5 year investments. So, I have my growth companies and, Google, Microsoft, these tech companies that I've been holding for a couple of years. And, whenever something IPOs or there's something as far as a SPAC that's getting a ton of attention pre-market, I might hop in, like DWAC was a good example of that. There's too much volume and too much momentum to ignore something like that. In that case, I'll log into my common account and I'll purchase shares and I'll flip those. But for the most part, when I'm looking at common stock, I'm only an investor. Now, with options, I day trade options, I swing options. Options are my bread and butter because I'm targeting quick return. And what I specifically do with my profits is I put it towards my long-term investments. So what I'm essentially doing is I'm using my options to day trade short-term, mid-term, and then my commons is long-term. And I'm only investing profits made from my day trades to invest long term so that my profit is always making profit and I'm keeping my weekly size at the same level every week so I don't get ahead of myself and I don't overspend for my weekly allowance. If it's 20, 50, 100 grand, it doesn't matter. It always stays the same so that I keep that same risk management, my same plan going in every week. And that's just what works for me. I can get really, really ahead of myself. Like when we had that crazy move with Amazon, and this week we had that crazy move with Tesla. I'm like, okay, I got to move money over because I'm going to spend it if I don't. So that's my way to keep myself in check. But that as far as that your question specifically, that's what I do with my option and my equity.
Perfect. I appreciate that. So real quick, I'm gonna go to Juicy in just a second. Also, shout out, I have like 20 people in the DMs that all wanted to be added to this Google Calendar. Love y'all. Thank you for everybody that wants to join this Google Calendar. It means that you enjoy coming to these spaces. So I think it works twofold. I hope it helps you out, and I'm glad that certainly helps me out to have that ability to be able to put that right into your
Hey, Wolf,
calendar.
can I
Juicy,
just say something quickly?
yeah.
For the people who sent their
Oh, of
email,
course, man.
Wolf also has a really good newsletter. So you should just tell him also that you want to be added to that, and he'll throw you on that. It's a really quick, easy read, posted every Friday. And yeah, sorry, back to you, Gov.
Oh, I appreciate that. Brings my tears to my eyes. Thank you. With that being said, and also Stock Market News has a newsletter, and even though it's tough to grind out and write, he writes out full newsletters and analysis and everything, so check that out in his bio, and he also writes on Bullish Rippers. Juicy, I wanted to go to you, and then I'll go to you, Andrew, and then Danny, I saw your hand as well. We're talking individual tickers here. I know you're going to go chart a bunch later. What's going to be happening?
So for me, I want to turn your attention to Netflix. One of the reasons that it came up on my radar was the fact that they beat, and the stock didn't move. So we're seeing pretty much the same thing from Google. So I did post a chart. Wait. Let me click on. Give me a second. You probably can hear me typing in the background. But I did tag us in a chart here, and I like to play the GOOGL. I don't like to play the GOOG one, right? I'm going to be watching this above 28, 1097. Just call it 2811. If we can get above that and we can see some volume and some intraday action, that's pretty good. I'll be looking for this to actually move back to the 2870.50 level. But again, like I said, with the market, I'm very cautious on adding some longer exposure at these levels. However, if you guys look at Google, that chart I posted, you see Google in a wedge. If that wedge breaks out, that's going to be a big move. Okay, if we break that wedge, I'll be looking to open a longer term swing. On a short term, long story short term, long above 2810, 2811. For a short term trade, whether it's an overnight hold, you're in it for 2 or 3 days. I'm not looking to add a month or two out. But if we break that wedge, which is pretty much my target, which is 2871, if you break that level, that's why I'll be looking to swing this. Because I looked at the report. I mean, I haven't deep dived into it. I couldn't find why they didn't raise it. They pretty much beat across all boards, and they raised guidance from my understanding of it. Don't quote me on that though.
Wait, Juicy, can I just ask before we move on? You
Yeah.
said that you like to trade GOOGL, right? More than GOOG?
Yep.
So can I ask you, is there like anything reason behind that? And the only reason I ask is because I had the same question. There's two tickers. Which one's more popular on Twitter, on FinTwit? And it's GOOGL. So I don't know if maybe there's a link
It's the
or...
options. So for some odd reason, and I'm not the best delta, gamma, theta, vega person around here. The GOOGLs, in my experience, they move a lot more. So I tried to test this, and I took the same basically strike on both, and I made pretty much over the term a little bit more, a little bit cleaner, with a better entry, with a less of a spread on the GOOGL over the G. So since then, I was like, I'm not even going to mess with the G. If that makes sense.
Yeah, I think that made sense to me, and it's interesting actually when you're putting out posts on Google. Me and Stock Market News, we're always testing things for engagement. By the way, anybody who like lives their life, like I live my life on Twitter. Like my whole job is being on Twitter all day. I get paid to do this. It's fantastic. So I'm clocking 40 to 60 hours sometimes. So we look at like engagement, and one of these we actually noticed was the GOOGL tag does better on posts than the GOOG tag. So it's even interesting how that like maybe factors in, even into social sentiment when they're trading it. Really unique thing to see. Okay, Andrew, going to you.
Yeah, and to Juicy's point, yeah, when you've been in the game for a while and you're in the options market and you're really doing it as a practitioner, like you do start to notice these little things like the liquidity. And yeah, like if one has a tighter spread than the other, it's almost like you're giving up edge, if you trade the one that's less liquid. So yeah, it definitely makes a lot of sense. That's something I never even thought about before. One name that I'm watching for tomorrow, and this is kind of like the beauty, for me, of raising a little bit of cash, it allows me to look at some of these other names that are moving and really look for new leadership. Like today, like, when the market had its little, like, I just call it a micro dip. Like I saw some people like literally like losing their minds on Twitter. And yeah, like if you're losing your mind over like the little micro dip, like 30 basis point, drop in the market, it likely means you have too much risk. And I do the same exact thing. Like when I have too much on, the market will have like the smallest little tremor, and I'm like, oh my God, like what's going to happen next? So yeah, for me, like I raised a little bit of cash. So now I'm actually like, I can be a little bit more aggressive in looking for some of these new stocks that are setting up. One that I had not even heard of until today, ticker symbol is MQ. Stock is Marqeta. I just posted on my Twitter feed. So this name, it's a relatively new IPO. And, we all know that the financials group is showing a lot of relative strength. I have some XLF leaps that I entered, a couple weeks ago. They go out until June. So that's like my core position in the financials. But I'm just noticing like there's so much innovation going on within the financial space. And it's all intertwined with cryptocurrency. Like MasterCard just announced that they're going to be integrating cryptocurrency into their payment network. So this name MQ, where it ties in, is MQ is essentially like an API developer for some of these financial institutions and some of these credit card companies. MQ, it's very close to breaking out of its IPO base. It showed a lot of relative strength today. It was up 13.51%. And this company, I'm just looking at the technicals, but Ophir Gottlieb, he's like one of the goats on Twitter in terms of fundamental analysis. That guy's just such a legend. He just announced this one as one of his top picks. I think he put it on his list. I think it was either yesterday or today. So one of the things I like to do is like, I'm for the most part a technical and market structure trader. In a prior life, I used to be mostly a fundamental analyst. So sometimes what I'll do is I'll look and screen for fundamental analysts that I really like, and I'll use them as inputs into my process. Where if I see a good technical edge, and then, hey, one of my guys who's super savvy on the fundamentals is into it, that for me is just like a little bit of an added edge. So this MQ, I'm watching tomorrow for this one to see if it breaks through the top of the IPO base.
Awesome with MQ there. Yeah, I always listen. That's one of my favorite things is seeing if the stocks will go through the base. But wow, that is a pump on that thing the last couple of days. I hadn't even looked at that chart. Interesting to see it coming back to those all-time highs. Okay, I want to get a couple other people involved. Real quick before I go to exclusive, Dan, you had your hand up before. Going
Oh
to
yeah,
you.
totally. Thank you. Yeah, and I can't remember. I think it was exclusive who was talking about his strategy and how he uses his profits. And I just wanted to double down on that. It's exactly what I do. It's so smart because a lot of the times when you're not a disciplined trader, if you're making, let's say you have a good week like Tesla this week, maybe you made money hand over fist. If you're not disciplined, you leave that money in your account, in your trading account, you're going to be tempted to trade with it. And guaranteed 90% of the time, you're going to lose a portion, if not maybe most of that profit, because you're juiced up, your psychology is all amped up, and you're like, you can't lose because you just nailed Tesla, and then the next thing you know, you just lost all your gains. So having an account management strategy along with a risk management strategy is so critical to finding success in this market. And I can only say when I started doing mentoring, one of my first mentees had that exact same problem where he would grow his account to like 7 figures and then blow it up. And it just turned out that he was actually a really good technical trader. He knew exactly what he was doing, but he had really, really, really poor market psychology. And not that I'm a psychologist or anything, but it was just as simple as going through the process with him and understanding what his issues were with why he was doing what he was doing. And the very thing that Exclusive said is what I told him to do. And I still to this day get texts from him every like 4 to 6 weeks saying, thank you, you changed my life. When I really didn't change anything, but put a different perspective on what he was already doing. So don't want to discount market psychology. You can learn how to trade. Anybody can learn how to trade. I'm not saying it's easy, but it's not really that hard to learn the technical side of it. But man, that market psychology, that could take you years.
Absolutely. And more people have actually been requesting that to talk. I think I might do a market psychology or trading psychology space next week. Get that on the calendar with a couple of
Count me
people.
in.
Perfect. Yeah, somebody who wrote a book on that reached out to me and wanted to do that. And also, Danny's criminally underrated. Look at how many charts. If anybody wants to see, he's already done like 30 charts while we've been talking. We gotta get this national treasure up to 20K. It's only like 500 away. Let's make
That's
it move.
hilarious. I love it. Thank you, Wolf.
Of course. Exclusive.
Yeah, so I was gonna Juicy already left. I was gonna let him know the difference. So say you're an institution, right, and you're buying millions of dollars of equity in GOOG or GOOGL, which is basically the difference between a Class A and a Class C share. So the Class A shares come with voting rights, and the Class C shares do not. So what that means to an institution is, say they buy, and you see these golden sweeps, say they buy $2 million worth of options that are deep in the money. It's because they're securing their position on the options with the intention of executing these trades for 100 shares, or in other words, 100 times leverage of their money. And when that time does come down the road where they're either going to liquidate or they're susceptible to a reverse stock split, they have voting rights versus the Class C shares do not have voting rights. And then, of course, you have Class B shares, which aren't publicly traded. Those are only for board members and owners and blah, blah, blah. And what that also means, too, is GOOGL trades at a premium. And in the face of options, which I'm not going to dive into it really now, I might do it tomorrow when we do the option Twitter space, but the intrinsic value of an option is directly related to the premium, which is Latin for reward or value. So the premium is derived to intrinsic value, which is why Google GOOGL ticker trades at slightly higher volume and about 1 to 2% higher price at various times. And it's specifically for that reason, because the purchase price of those insurance policies or issuance on these common stocks is why it's based on that price. So that's like the big picture as to why you see more investors or more institutions buying these Class A shares versus Class C shares.
Yeah, that definitely makes sense. And actually, when we talked about it, some people hopped into my DMs and kind of dropped me some explanations as well. And yeah, shout out to Juicy. He's just getting ready for a live stream, but really appreciative of everything he does. And he'll be on Spaces with me tomorrow. If you're enjoying this space, I think you're really going to like this 12 p.m. EST one tomorrow. If anyone is listening, we're doing a how to trade options with Stock Talk Weekly, Gavin, Exclusive, Juicy, Shark, and I think. I hope I'm not missing anybody, but I probably am. Listen, there's a lot of stuff that goes on throughout the week. It's all, however, if you need it, in my pinned tweet. I spend like 4 hours every weekend making a graphic and DMing people. Oh, Bull Trade Finder, that's what I was forgetting. He'll be in there too. So you can really check this all out in the pinned tweet and just see which ones you want to go to and pick and choose as well. With that being said, Sarah, we're getting you back into it. I want to hear a little bit more from you if perhaps any of these individual names have stood out to you that we've talked about, if there's any on your radar. And also, I'd love to hear, I think before you mentioned, right, that you are not having price action above here, so perhaps you're getting a little bit more bearish. But what about the past year where we've consistently hit all-time highs? Is there something different about this point? Is it, I just, would love to dive a little bit deeper into it.
Okay, yeah, sure. No, I'm not talking about when I say a correction, I don't mean we're crashing by any means. I specifically just meant a short-term correction. Now, the thing about the market where it is right now, and with seasonality and all those things, I know about the Santa rally and how stocks like to move during Christmas time. It's so strange having back-to-back outside months because only really, well, I say only 2 things can happen, but technically 3 things can happen. And if we get triple outside months, I'm going to lose my mind. I would love it, but it's never happened. So the most likely scenario, so going into November is basically the most likely is one of 2 things. We are going to open up as an inside month and we are going to stay an inside month. Or, so that could happen, meaning we don't break, this month's high or low. Or we break to the upside and we just keep going to all-time highs. So that's kind of why I said this is the time to kind of step off the gas and wait and let the price action tell you what it wants to do. And I'm not telling anybody they should be shorting or anything like that because you have no signal yet to short. And as we've seen for the past, since COVID, since, a year and a half, we've just gone straight up. So if anybody is shorting, I would just warn them that it's to be short term. You're not going to hit a home run. The market is most likely not going to crash unless there's some crazy black swan event. And while you guys were talking, it's funny from day to day. So yesterday I had posted like a watch list of what I was watching, and everything on that list except one ticker. Hold on, how many was it? 2, 4, 6, 8, 10, 11. So yesterday I had 11 names on my list. 10 of them were bullish and one of them was bearish. And then when I went through my watch list today, it's the exact opposite. So I've got 2, 4, 6, 8, 10, 11 again. That's kind of funny. And all of them are bearish. So, and also I'm a very short-term trader. So the tickers that I'm watching, I'm only watching for tomorrow. So just because they're bearish for tomorrow, I mean, that doesn't mean that we're going to crash or anything. But with the candles that formed today, how we made new highs, but they're closing kind of as shooters or dojis, suggests we're going to have red days tomorrow. So I would just tell people, and again, very short term, just for tomorrow. My day trades are just day trades, so they're just for that day, unless I post like a swing idea. But so the triggers for those on any of your names is tomorrow. If you break today's low, it's probably a good short opportunity. And AMC, I know everybody wants to be bullish on it, but it's in a very, very dangerous spot. Let's see. And it was an inside day today. So it did not play along with the market. Wait a minute, I think. No, GameStop did not have earnings. So tomorrow, if we break AMC's inside day to the downside, you could possibly see like 34 levels. But that's it. So short term for tomorrow, I'm just looking bearish.
Okay. Well, I definitely appreciate, the more elaboration into the short-term bearishness, the style that you trade, and how this fits into it. Thank you, Sarah.
Yep.
Mel, I want to go over to you. And right before I do, thank you so much to how nice everyone has been tonight in the audience as well. I've been answering DMs. I try to multitask. I've gotten through about 20. There's still maybe another 20, 30 here to go. And honestly, like I'll say to the panel, because they're not just speaking to me. Like I am not the educator here. I just, I get to do this. So I can throw my questions out and get them answered and get educated. But these speakers are the real gold mines of data and information and value and personality. And being able to listen to them is an absolute pleasure for myself. And I know it's a pleasure for the audience as well, because they've sent me so many DMs tonight applauding this panel and thanking them for their time and just calling them, the greatest. So I second their sentiments and really do value everyone on this panel. So thank you for being here with me. Mel, I want to go to you. And Sarah mentioned swing trades very briefly. If she said she ever posted one. Speaking of swing trades, did any big money come in today in any of these option pools that looks like, potentially they're trying to play off a catalyst, a short-term movement, and they're still kind of sitting in that money, or maybe, even within the past few days?
We're still seeing quite a bit of positioning ahead of ERs. So I will not hold through ERs. And one thing that I want to caution anybody about that may review options flow is keep in mind that they're positioning both, calls and puts. Oftentimes you'll have people take on put protection to protect, a larger book. There's just a lot of activity, both calls and puts. So I don't think that anything is ever just, so clearly directional to take that risk and hold through ERs. I know that some people like to go around and cherry pick some things just because you see something. But again, especially with shorter dated options, you have to kind of navigate an obstacle course. Even if they beat, raise, everything has to be so perfect. Everything in their delivery on what they say on their call has to just absolutely crush for those options to still be able to profit, especially when you consider the IV crush, especially for those that are trading weeklies. So as soon as that event has been announced, that IV comes out, and you look at, what we have in some of these tickers that are coming out and reporting positive information, and they don't necessarily, they're kind of relatively flat. So just keep that in mind and execute some caution. But I do like once we start to have them report, watching and seeing what activity comes in on those that have reported. So we kind of have some fresh information. We're able to know what the ERs are, them coming back in. And one of those today was PERI that reported this morning, had great earnings. They started coming through and hitting the 1217 $25 and $30 calls, as well as the 1119 $30 and $35 calls. So a name that you don't see very often. I'll go ahead and post that, but I do prefer this setup better than something that's, got ER in 2 days. This is just a little bit cleaner to me. It's positioning after we've had the information come out. So I'll post PERI. Otherwise, DDOG had a sweeper, not going as far out. This is going to be the 1119 16250 calls. They do have, thank you Vegas for getting me that information. She was kind enough to share some news on their investor event. I thought it was just tomorrow, but looks like DDOG does have a conference today and tomorrow. So keep an eye for potential catalysts there. But activity, the 1119 16250s with a 1.26 million sweeper. They still have to report next week.
Perfect. And bouncing off of that, we'll go to Vegas, and then we'll move into some closing remarks. Vegas.
Shout out to everyone listening tonight too. Have over 700 people hanging out here. So thank you everyone for sticking around through all the different great commentary from everyone here tonight. I just want to quickly just touch on just a couple stocks that, to keep an eye on for some additional continuation. So we did have, obviously, the banks report a lot of their earnings last week. And so there was a lot of dark pool flow that did come in on the bank stocks. And so one of them in particular that I did mention last week, which finally did trigger today. So definitely keep your watch on Morgan Stanley. So we did finally break that 103 level. So if you're looking to trade Morgan Stanley, obviously for a swing trade for the November monthly calls, and there is room on these, currently closed around 103.43, and looking to head towards 107-ish. Maybe it might even break 107, but definitely there's room still on this actual stock because it actually just triggered today. One of the other ones that I liked also was Oxy. OXY. I did mention that on my Twitter feed, and still liking it. I mean, that one had a nice 52-week closing high. It has been holding at 34.50 level too, and really looking for that one to also have some sort of continuation as well. The other one too to keep a watch on is Federal Express. I know I did mention that too on my feed. However, that one still has a lot of room. I mean, when I was looking at FedEx, I mean, it has started to have a nice move. We're heading towards that 240 range, but as long as they stay over this 235, we have some room here towards, I would say, at least another $5-6 move coming on FedEx. And I think one of the speakers mentioned last week, I think it was Wolf mentioned too. I think that between FedEx and UPS, kind of a bit of a seasonal stock. So definitely keep a watch on FedEx because that one still has room. So even if you're not in the trade currently, you can certainly take a look at the opportunity here, and there's still room because I love opportunities where there's still, dollar moves still in the pipeline for you to profit from. So definitely really liking that one a lot. And then one of the ones I'm just kind of eyeing, two different stocks, but, Carnival Cruise Line, I know, is really beaten down. I mean, these travel stocks are really just, obviously a killer because of COVID. And just keeping my eyes out on Carnival Cruise Lines, really more from an investment perspective. And, with what I'm looking at really for Carnival really is January 2023 calls. And in particular, what's appealed to me are the $30 calls. There's over 49,000 open interest, and I like the fact that it's 2023, so you got over a year of time on that. I think that's pretty cheap. And we know that, Carnival Cruise Line is definitely going to be expecting to see the ships returning in 2022 around January and February. And they are saying that they do predict that the fleet will be transporting guests by the spring of 2022. They also did mention that they have a lot of cruises booked and basically a lot of itineraries sold out. And they said that they plan to have 17 of their ships back in full service by the end of this year. So I think we'll definitely see, obviously, a recovery in this particular, beaten down COVID play that still really has not made its comeback in comparison, let's say, to other stocks that have made a lot of a COVID comeback. I think, CCL is just one of those ones that still has a good opportunity. So definitely, take advantage of the fact that it's only around, $21, 90 cents at the moment. But, if you can go out to 2023 and just kind of like, when you have those good profits like days like Tesla or DWAC, take some of that money and just throw it into these like set it and forget it long-term options and just leave it alone and just ignore it and just let them kind of marinate. And then the last one I just want to mention is QS. QS, I haven't traded that in such a long time. And I remember, QuantumScape, I was just couldn't believe how beaten down this was. And, this stock had a huge run. If you recall, it did have a run up at one point back in December 2020. It did go to 132.73. And I mean, if you look at the price of the stock at the moment, I mean, my gosh, I mean, this is, talk about a bargain. You like to buy these stocks when they're low and then obviously sell them when they're high. So this one, to me is a bargain because it's down significantly from its high last year of 132.73. They're getting into the lithium metal batteries, electric vehicle. They did have a third quarter shareholder letter that was sent out, and their cash is pretty good. They do expect their capex will be in the range of 135 million to 165, and the guidance was reiterated of greater than 1.3 billion in liquidity at year end. So I do believe with their strong cash position, it's going to give them the flexibility to allocate resources, and they're going to be working on commercializing their solid state lithium metal technology. So I think this is one to put on a watch list. I'm not really sure about taking any kind of position at this point, but I'm definitely going to be watching because this has the chance to definitely make a comeback and definitely should be on watch, especially because we know that it's had quite the slice from where it was last December, and looks like they have the cash, and I would not be surprised in the coming sometime next year. I won't be surprised to see this heading back towards $100. So this could be a good opportunity just to keep a watch, and I believe they have other things in the pipeline. I just wanted to mention, they also have a partnership. I think they signed an agreement with OEM, Original Equipment Manufacturer, as well. And so I think that's, one of the largest automaker manufacturers. And so I think, that's another plus for them. And they obviously have connections with Volkswagen as well. So definitely put this one on the watch list, especially if those of you that like bargains and want to see these comeback stocks. I think between that one and CCL, some future good money to be made on these ones.
Perfect. Wow. I love it. An epic monologue here to kind of go over everything that you're looking at for the week. And I feel like you covered in great detail. And I love the idea of finding the bargain, right? Because we've come at this from so many different angles of there's the momentum, there's other areas, and then you're coming at it going, look at this stock, it's on sale, it's 80% down, and it's great fundamentals. I'm going to go in and buy it. So really a full rounded picture. Thanks,
You're
Vegas. Now we are going to move into some wrap up. But two of my faves just popped up here at the last minute. So maybe I'll just give them each, maybe if they want to take like 2 minutes just to give us thoughts on the market. Is there anything else that they want to say? Ben, thanks for coming up.
Hey, thanks. I joined late, but just to build off of what I just heard from Vegas and then prior to that with Mel, I'm working hard over here and having to rewrite some rules because one of my big rules that I've had for a very long time is not to buy anything below the 200-day moving average. And then if it's a newer issue, I try to stay away from anything that's trading below the 50-day moving average. However, now that I'm starting to understand and follow this call flow and all that I've learned from you guys and the spaces and from Mel and Vegas and I'm kind of blown away at the fact, like, for example, I heard you talking about MQ. I have in my notes and shared with others on the 18th that the November 20s were very active in my notebook. I even put a little star. Day before that, I had ME noted. I have QS noted just the last couple of days. I just heard Vegas talking about it. So I'm going to actually have to go back in and rewrite some rules now based on call flow, because a lot of this is happening, like you said, at the bottom of bases, coming off the bottom, kind of rounding back up the right side. A lot of times it's happening below both the 50 and the 200-day moving average. But those moves, like, I can't continue to ignore them when MP runs from under 20 to 32 in 2 weeks. I can't keep ignoring that. So like I said, I'm going to get in here and rewrite some of the rules.
My favorite thing is hearing the joy in Ben's voice when he talks about charts. It's like palpable.
I love it. It's my life. I live for it.
It's better now that like I've actually met you in person and I can like see it in person, like picture you like just like so happy while he like sees the chart. He's like, oh my God, we're pushing through the anchor view up. It's happening. I love it.
Thanks, buddy.
Hey, if I don't take this moment to say hi to Ben, I will forever be mad at myself. Hey, Ben.
Hi, Sarah. I was looking for you in Orlando to get my hug, but we'll save it for the next time.
Yes. Well, I hope you had fun, and I'll hug you this spring.
Very good. Sounds good.
Shout out FinTwit Conference 2.0 happening this May in Las Vegas. Las Vegas, May 12th through 15th, I believe. Put it on your calendar. Block it out. We're going to be at the Aria. We're going to have 400 people from FinTwit there, hosted by Jonah Lupton, and I'm sure Wolf will be a media sponsor. With that being said, Mr. Douglas Boneparth. How's it going?
What's up? How you doing, Wolf?
Oh, I'm living the dream. How you doing?
Good. Just, gonna get ready for bed soon. But I saw this was going on. I finished the meeting. I figured, you know what? I have no business talking about charts and stocks, but I knew you'd put me up here and I could at least say hello to you. Hello to Stock Market News. I see a lot of good friends here. Jessica, Stephanie, FinTwit. That's it. Just want to say hi. Wish everyone an awesome evening. Hope you all picked winners.
Hey, Doug.
Yeah.
Can I ask you a question, just because you kind of touched on it? What time do you go to bed?
I'm trying to go to bed between 10:30 and 11 o'clock is my sweet spot.
Love it. I'm jealous.
I mean, it's an early start, but sleep's important, super important. Just one of the things, if you get right, will probably pay dividends.
Is that financial advice?
Yeah, I think good sleep is financial advice. For sure. A good mattress. Amazing financial advice.
Cheats.
I love it. Awesome. Well, Doug, any other insight on the market you want to give?
I don't think it's worth much, but it's just amazing to me how we go through these periods of volatility, either through rates or some narrative, and we just keep time after time after time, coming out of these head fakes into more bullish, markets. It's wild. I don't have much more to add around that. I just like knowing that my clients and you guys are hopefully doing well and making money and getting closer to your goals. Can you imagine thinking that you'd want anyone to be on the opposite end of that? I can't.
Amazing. Doug, will you come to my SHIB space at 8:30 p.m. EST tomorrow in case any of your clients ask for an education on it?
Yeah, I'll be in the city, but if I'm driving home and I can put this thing on Bluetooth, I'll be there.
We'd love to see it. Awesome. Douglas Boneparth, everyone. Make sure you're following some of the best content that Twitter has to offer, and it's literally free.
That's a lie, but thank you very much. Bye, guys.
All right, take care, Doug. Okay, all right. With that, I'm going to move into the rest of our speakers for a little bit of wrap up. Stick around. This is sometimes the best parts. Also, I have like so many DMs. Thank you, Stock Market News, for shouting out the newsletter. Because I write my newsletter through Review, which is on Twitter. All you have to do is if you go on my bio and you click, if you just scroll into my bio, it's literally attached to it, and it's like right underneath. It's called the Weekly Howl, and you can just click subscribe. It'll save a lot of time because all I'm going to do is just send you a link to that otherwise in the DMs because I can't actually just add you. I'm pretty sure you have to actually be I think I might be able to, but I don't know. This is the
You
easiest way.
can add him, and I would like to throw this out there that maybe you should make Wolf earn your subscription. So I think that you should send him a DM right now with your email and demand that he adds you to it. I think that's only fair.
All right. Well, I guess I'm not sleeping much tonight. Okay. Well, with that being said, stock market news. I would love to go to you for any wrap up.
I mean, listen, I guess we're going to get two Big Wolf compliments in a row. I feel like during the spaces you were talking about how you were at 29K, right? Was that during the spaces or was that earlier?
That's correct. I hit 29K at the first minute of the space, I
So
think.
listen, he's already at 29.2. The account is super close to 30K and deserves to hit it. I think under 1K away, I think it's okay to start a little bit of a 30K challenge. So I think that hopefully we can get this by tomorrow. So I think that will give Wolf Financial a follow. I think that a couple of the other speakers here, check all of them out. Not a couple of them, every single one of them. I'm big fans, and I appreciate you for having me. This is one of my favorite spaces, the weekly ones we do, and clearly a lot of people in the crowd are fans of it as well. So I'm looking forward to being back here with a bunch of the same people again next week.
Hell yeah, absolutely, all about that. And this is again, like my favorite too. I think but I'm holding 14, so it's hard to pick. They're like children to me. With
Hey,
that being
Wolf,
said, this one had over
I just want
seven.
to let you know
Yeah.
that in a couple of the other spaces, I will mention that you said that this one was your favorite, and just let everyone know.
Whoa. Fighting words, okay? Listen, what's said in the space stays in the space, except because I record them and put them on YouTube and Spotify. It doesn't. Check out the Wolf YouTube and Spotify. With that being said, also, other thing, again, some people ask me to add them to the calendar in my DMs. You got to send me your email too. Otherwise, I'm just going to ask for the email. So it'll just make it very simple. If you just send me the email, then I can add you to the calendar. Okay, Andrew, going to you.
Yeah, I just want to thank you so much for having me on the space. I love being in this group and just, talking about different ideas and just hearing all these different perspectives. For my closing remarks, what I'm going to talk to you about, I'm going to tell you not what you want to hear, but what you need to hear. So, in
Is
the
that the
market,
Matrix?
exactly, yeah. So if you're in an uptape, it's super easy to make money. Everyone's making a ton of money. This is a beautiful market. It is awesome. The S&P 500 is very extended away from the 20-day moving average. Just think back a couple weeks ago. Everyone was super concerned about the market. And really, that was the point in time where it made sense to be adding risk. Now, overall, we've seen this big sentiment shift where overall, there's not nearly as much concern over the market. And now we are actually extended from the key moving averages. It's super important if you are a technical trader, especially if you use options. If you're just a common stock trader, you really don't have to worry as much. The options traders, they need to worry much more. Definitely just keep in mind, if you have trades on, you want to be updating your trading plans. So what I mean by that is, you should be looking at how your positions are moving and you should be updating your stops. As that position moves in your favor, everyone's going to be a little bit different on how they do that. But there's a couple different ways to go about, being more aggressive or less aggressive in the market. Most people think it's like either I'm 100% in long calls or I'm just going short the market. One thing I like to do is if I'm in mostly options, the first step for me is, okay, let me go from options to common stock. That's a way I can take off some risk. You're still participating in the market, but you don't have to worry about that leverage. Next thing, if you're in common stock and you want to de-risk even more, you can go to cash. And then if you want to de-risk even more and take the opposite side of the market, you can go short. So for everyone like in your system, you should have a way of dealing with overextended markets in such a way where you don't have to worry about what the market is going to do next. So super important, just figure out your way of keeping the money that you earned, because it's super easy to make the money in this up tape. So it separates, the very few successful traders from the vast majority of traders that are not successful, is the successful traders keep most of that money that they earned. With that being said, thank you so much for having me on. I really appreciate everyone on this space.
Dude, you definitely practiced that whole last section because that was good. That was movie worthy right there. Absolutely, I fully agree with you. And it's funny, that last part right there where you said it's about them keeping the money. That was literally I used to work at Goldman Sachs for PWM, and that was like our tagline to clients was like, it's not about how much money we make you, it's how much we help you keep and everything. So 100% you hit that right on the head. Exclusive, would you like to go next? Just doing a little bit of wrap up.
Did you say me? I'm sorry, my fiance came in.
Oh yeah, no worries,
Oh,
all you.
okay. Yeah, no, as always, man, it's always a pleasure to come on these spaces. I mean, and it is one of the more exciting moments of the week, hearing everyone's success stories, hearing everyone's setups, everyone's thoughts on the market. Everything being shared is extremely great content. And at the end of the day, people need to remember that it's all free, which is the best part about it. So, empowering retail, everyone on the panel that speaks on these always is for retail. So definitely good to be a part of it. And definitely looking for more. So to wrap up, what I'm looking for, so there was a couple of, I apologize for not responding. There was a couple DMs, and what I'm looking for, as far as setup wise, I posted a few of the setups in the energy and EVs that we're looking for throughout the week. So just go over to my channel, scroll down, and I got a couple DMs last week that I never addressed. So if you want to look for a chart specifically on our timeline, if you go to the search tab and you type in the ticker with the $ before it, and then you type at exclusive trading, it'll pull up basically every chart correlated to that ticker, and then you can sort by the latest posted chart and scroll down to whatever date you're looking at, and you can see the original setup. So I got a lot of DMs about, hey, this is great to see the move, and there may be a move after, but how do we see the move that you had before the breakout? And that's how you do that. So, we're looking for continuation in a couple of names, like, let me pull over some of these trades from today. And I'm trying to be more, I'm trying to lean more towards posting stuff on Twitter, but I want to be careful as far as that, because I don't want anybody that doesn't have good risk management to get into options, especially how risky they are. So I can't post updates as quickly as I can on Discord, on Twitter. So that's the only reason I don't post any movements that we make in the Discord on Twitter, as other than charts, because that's before it happens. But what I'm looking for, I know me and Ben actually spoke about IWO, and I know he likes that growth ETF. So, there was a couple of names that I traded based on that trendline break, which worked out. And although it pulled back from that 309.34 pivot, it bounced off of the 303.61 pivot, which is really close to that trend line, which means that we might get a move back to the upside. So I'm going to be looking at a little bit more into the Russell 2000 growth ETF names and see if I can kind of narrow it down to, my top 10 to 15 names and try to keep the list small. I trade way too many names a day to post everything, but we do our best. Specifically tomorrow, I'm going to be looking for a bounce on Tesla. I took another Amazon long. It was a really expensive strike, so not recommended for smaller accounts under 200 grand. Those contracts on the 34.20 strike were $6,000 a piece, so definitely a higher premium. I'm planning to roll up my NVIDIA calls. As you can see from our latest post, we still have a price target over 245. So I've had a couple of strikes up to 230, 250 that are up 600%. So I'm going to be looking to scale out of those and buy some roll-ups on the 245 and 250s, maybe after a 10 to 15% pullback on the premium at the open. And of course, that is going to 100% depend on the sector and the market open. So, not saying get in at the open because you might be susceptible to some slippage, as these options do happen to, apparently get affected by that, especially on Robinhood. So be careful with that if you're trading options in the first 5 minutes. And I'm looking for some names that are a little bit less looked at right now, like Etsy and SPG. I'm still really bullish on that long. And I just picked up a new long starter for Square that I'm swinging into November, 275 calls. And Workhorse.
Sweet. Going to be keeping my eye on some of those and chatting with you and checking out the Discord. I'm now in some really good Discords, and I definitely say yours is one of them. And I'll see a lot of people joined yours actually during this call. So you love to see it. Cool. Keeping the ball rolling. Danny, would you like to go next?
Sure. Big shout out to Ben Pattern Profits and talking about changing his rule set. I think what I'm going to close with is not necessarily any plays. I think I've pretty much given what I'm looking at, but I wanted to talk a little bit about rules and habits. I posted something up in the spaces on Atomic Habits by James Clear. He's a great follow. I highly recommend it. But building good habits in life will translate to building good habits in trading. And if you don't have discipline in life, you will not have discipline in trading. So I'm going to leave you off with 10 rules for life, and these can really apply to trading. So number one, be a lifelong learner, especially here in trading the markets. Ben was just talking about how he didn't really know much about dark pool. And honestly, Mel has been super helpful even for me. I've had a lot of DMs back and forth and her telling me a little bit about how she looks at dark pools. So be a lifelong learner. Don't be afraid to embrace the learning process. Next, embrace optimism. You got to have a positive outlook. If you have a bad day, don't trade because it's going to creep into your trading. You got to have high standards, focus on creative outputs. Spend time in nature. You got to get away from the screens. We're constantly on our screens all the time. If you want to come out every day fresh, get off your screens. Accept responsibility. That's the hardest thing. Sometimes we have a bad trading day. We have a bad day in life. You don't want to face that responsibility. You just shrug it off and push it off to the side. It's not the way to approach it. Embrace it, learn from it, move forward. Learn how to say no. That's sometimes the hardest thing. See a great trade, but maybe you've already hit your quota for the day. You've made the money you've made, or you've lost the money you wanted to lose. You got to say no to the trade. Got to have a rule set in place. Stop caring what other people think. We all follow other people's trades, but ultimately we need to own our own trades. We need to be able to chart it. We need to know what our entry is, what our exit is, where our stop loss is. And I'll leave you off with this. Number 10, teach others what you know. This is what this space is all about. I'm learning from Ben. I'm learning from Vegas. I'm learning from Mel. I'm learning from Andrew. And you all are learning from all of us. So we're all a small community. And if you think about it in the grand scheme of things, right, we are not Wall Street. We are all retail traders. So why not be together? It's not me against you. It's not you against me. It's us against Wall Street. So, Wolf, thank you for putting this together. Panelists, thank you for being here and being an inspiration to all of us. And thank you, everybody in the audience that's joined us. Look forward to seeing you on the next one. Take care. Peace out.
Thank you, Danny. That's quite. Listen, all these endings are beautiful, and honestly, there is so much value to be held in there, and I completely agree with what you just said there. And again, it is amazing that we have this recorded, so we can upload it. I'm actually uploading yesterday's with Black Box Stocks right now. With that being said, a big shout out as well, like you just said to the audience. Shout out to my boy Greg. Greg, get up here and co-host, man. Come on, do it. With also that being said, Vegas, I would like to come to you for any final words.
I just want to thank everyone for all their time, and I just want to say that it is definitely retail against Wall Street. We are here to just collaborate, share ideas. No one has an ego here. We just want everyone to do well, give great content, give great trading opportunities to definitely share with other people, so that everyone can bank and definitely generate profits and generate revenue, and just take your trading to another level. And I'm learning from everyone on the panel, learning from Sarah with her strat methodologies, and I love the money flow like Mel, so we're like money flow addicts. And so I love everyone's feedback, learning from Ban, and the whole panel. Just every week I'm even learning from all you guys too, so I'm happy to share information, happy to hear that the traits that we're sharing, I love, when I see that they trigger, and then, that, everyone's banking, or that, ideas that were shared come to life. Just makes this experience rewarding for me, because I love seeing the success of everyone's trading journey. And so that's why I love being here each week. So I want to thank you all, and I love hearing everyone's success. So thank you so much.
Hopefully we keep ringing that success bell. It's been going off nonstop. So let's keep that going. I agree. This has been one of the most, not just the most interesting space, but I think the most useful ones, where we've really found and honed in on these opportunities. And, I think Andrew might have kept even a list perhaps of some of the names we talked about tonight. We'll track them to next week, see how we did. And of course, Stock Talk Weekly would love to hear, any parting thoughts, advice, words from yourself.
Yeah, man. From my perspective, what I'm doing really in these kind of climates in a market where I'm not confident in, the trend in the indices. I think, predicting the move in the broader indices has proved challenging, even from a technical standpoint. For much of this year, I know a lot of, really experienced technical traders that have been, had expectations and been baffled by them, by the way the markets have moved this year, and, how quickly we've gotten our head above water in trends that didn't seem favorable. And so, in these kind of climates where I'm not confident in the direction of the indices, I really try to play, pockets of the market that I think have good volume trends. And, I become much more of a volume oriented trader when I'm not confident in the broader market, and when I'm looking for opportunities. As Wolf, and as most people that follow me know, I trade momentum, and I trade, high beta names, highly volatile names, with controlled risk, obviously, on every single trade I take. And I use that to try to skew my risk and reward, to be asymmetrical to the market. And so, one thing I encourage people who, there's obviously many different styles. There's people on FinTwit that just trade large caps. There's people on FinTwit that just trade options. There's people on FinTwit that just trade small caps. But, there's a lot of perception about risk reward that's misconceived. And, that perception is that, the higher your reward, the higher your risk. Now, while that's technically true, what it really is implying is that the higher your reward, the higher your volatility. And so if you, as a disciplined trader, every single trade you take, if you define and manage your risk, you're going to inherently reduce your risk, and therefore skew the risk reward in your favor in circumstances and with assets that, might be viewed as highly speculative, or not intended for bigger accounts or for smart money. And so a lot of that perception was what I'm trying to fight on FinTwit, and kind of show people that you can trade volatile names as long as you control your downside, and are you disciplined about taking losses, and prioritizing opportunity cost. And so in markets like this, like I said, I'm looking for pockets of volume. I'm up as usual as soon as the pre-market opens. Webull pre-market open at 3 a.m. Like, I'm up every single day, and so I'm tweeting at that time, and I'm always monitoring volume pockets, how they're affecting the bid-ask spread. What the chances are of continuation are into the regular session. What the likelihood of pops at open are based on volume influxes. And so I become a very volume oriented trader, and I try to trade in sections of the market that I think, are either, hot because of a trend or a catalyst or a theme. And, I try to play in and out of those pockets. And so, in a more bullish market like last year, I have a lot more of a broader approach, and I'm trading, multiple asset classes. I'm diversifying, in my exposures a lot more. But, as the market gets tighter or as the market gets less predictable, which, I feel like we're in a phase right now where there's so much policy uncertainty headed into next year that you can't really predict this shift in sentiment that's going to occur over the course of the next 6 to 8 months. And so, until I see a defined trend in the major indices that I can trade off of consistently, whether that's on the long or the short side, and that's another thing to keep in mind is there's a ton of bull bias on FinTwit where everybody wants to long everything, and people need to understand you can trade both sides of the market. But until I see a defined trend that I can trade in one direction, I'm going to continue to use volume and momentum to identify opportunities that can be explosive gainers or explosive losers as well. There's nothing wrong with playing puts or shorts as well. So yeah, I'm just continuing to gear myself more specifically. I'm moving from sector to sector, from theme to theme. I'm trying to be as nimble as possible. It's been working exceedingly well over the course of the last month. And, like I said, I'm using those net asset value SPACs to protect my profits because it's better than any bank account in the world. And, for anyone who doesn't know about net asset value SPACs, if you're not familiar with SPACs, I'm not telling you to go and just start trading SPACs like crazy, but, I really encourage you to look at net asset value SPACs and the benefits of stowing your profits into these companies, or these holding companies, I should say, because their trusts are guaranteeing your redemption. So if you're buying some of these names, like I mentioned earlier, close to 10, it's as good of a bank account as you're going to get. If some of them have good fundamental stories and, tailwinds behind them, you can put your money there. And, like what happened with SEH and XBDI over the course of the last few weeks, I threw all of my profits in there from about 10 different momentum trades into those two names, and they both went up between 15 and 25% in 6 days. And so when you have zero risk by buying these near net asset value, they're a great place to stow profits. They're a lot better place to stow profits than your bank account, in my opinion. And so, keep in mind that a lot of these different asset classes have different rules and different regulatory structures and different share structures that, again, can dramatically skew your risk reward if you're aware of, those differences. And so I encourage people who are really pigeonholed into a certain sector or a certain theme or a certain asset class or a certain style of trading, expand your horizons, learn about different asset classes, learn about different types of stocks. Don't be scared necessarily of names that seem speculative or the media might portray as a speculative narrative. Do your own research and come to your conclusions, but there are a lot of different ways to allocate your capital in the market that can help you outperform the market, even in cases where your stock picking is not of ace quality. And so if you find these different capital allocation strategies, I know people who have generated returns this year doing nothing but buying NAV SPACs, nothing else, and they've generated massive returns and massively outperformed any of the major indices. So there are, as the market develops and more of these asset classes become fleshed out and retail interest, and retail sentiment improves, and the shareholder bases change, there's new opportunities being presented here all the time. And so again, yeah, I just encourage people to learn, broaden your horizons. I trade everything. I trade sometimes purely technically, sometimes purely off fundamentals. I trade options, small caps, large caps. I play, earnings reactions. I personally try to do everything. I'm not the best at everything, but I try to learn every day, even though I've been doing this for 10 years. And I try to learn new strategies every day. And I keep my ears and my eyes open and, pay attention to what the people are saying on my feed. And, sometimes people are very dismissive of, other people's opinions, especially when they've been doing this for so long. And, just human nature, people's egos grow. But, trying to be a learner every day, no matter how long you've been doing this, is so critical, in my opinion. And learning about these different capital allocation strategies, learning about these different structures and different asset classes, and learning how to trade them. So, yeah, that would just be, my closing remark.
Beautiful, amazing. Yeah, I think there's a lot to take away from that, and I love the style of dabbling a little bit in everything. That's kind of I feel like where I'm trying to go with some of these spaces is like letting people dabble in everything. So it kind of makes you the ideal speaker to have across them because I feel like you're hitting them all. Yeah, and excited to do that. And I can't. I'm amazed. What is this hour like 10 for you on Spaces today?
Yeah, so 40 hours of Spaces in the last 6 days. So I've been just grinding it
Yeah.
out. But I mean, I enjoy it a lot. Our Q&A sessions during the morning, we've had unbelievable turnout on our last
Yep.
5 spaces, we've had between 1,500 and 2,000 active listeners, and that's without any promotion. We're just starting these spontaneously, no scheduled time. So we've had amazing turnout. If anybody in the audience has been attending those spaces, thank you for your time and for listening. Getting that kind of reception is great, and it makes it worthwhile for us spending our time there. I'll continue to do those spaces for free for the foreseeable future, and try to answer as many questions as possible. But I think they've been very productive. And Wolf and you, Stock Market News, have tuned into a lot of them. I see FinTwit News in the crowd. He's there in almost every one as well. And so I appreciate everybody who's been tuning in regularly. But I've found that they've been very helpful. I've gotten an overflow of DMs over the past 2 weeks of people just being thankful that we're providing just an opportunity for people to ask questions and learn new strategies. But yeah, I mean, I like I said, I've been doing this for 10 years. I learn something new every day. I learn a new style, strategy, and approach almost every day, and it really benefits me as a trader. So for newer traders, I anticipate that it'll be beneficial to you to educate yourself. And so just keep in mind that, like, if you want to be good at anything in your life, you have to outwork the majority of the people that are doing it. And if you want to be exceptional, you have to outwork the vast majority of the people that are doing it. And to do that, for most people, barring, inherent skill, is hard work and putting the time in. And so whether that's waking up at 3 a.m. every day like I do, which I don't think by any means you need to do. I know a lot of successful traders who don't wake up till 9 a.m. But whatever that means for you, whatever that contribution of effort means to you, whether that's studying, learning new strategies, waking up earlier, studying volume pockets and pre-market, whatever it may be, just put in that extra leg of effort if you want to outperform the market consistently, because the market of last year is not a typical market. You're not going to be able to throw gum at a wall and have everything run 500%. That's just not a normal market. And, people who started trading last year, I think, don't really quite realize that yet, even though we haven't seen, that level of bullishness this year. I don't think a lot of people quite realize that yet. So, the way to get out of that and learn it is just to educate yourself. So keep learning, be curious, work hard, and be open to new ideas and new strategies. Most of the accounts I see on FinTwit, even the big ones, are so pigeonholed in one way of doing things, where you see fundamental traders who say technicals don't matter, and you see technical traders who say fundamentals don't matter, and you see large cap traders who say they'll never touch small caps, and vice versa. And while it may work for people who've been doing it for a long time, I find that to be silly, and I always keep my eyes open to new opportunities.
Right on, man. You're definitely doing it. I think, in my opinion, the right way, and everyone has their opinion on that. But it never hurts to be open to opportunity. With that being said, just want to remind everybody. Well, first off, thank you to everybody that hung out. I just hosted about 4.5 hours straight. So that was pretty fun, enjoyable stuff. And also, shout out to the morning spaces that they're doing. They're so great. Because obviously I like to be very hands-on with my hosting. In the morning, I'm like a little bit busy with other stuff, so it's perfect. I just hop into those spaces, chill out there, ask my questions, see my live trading with them. So definitely catch us there. Tomorrow, 4 spaces on the agenda. 12 p.m. EST, how and when to trade options with Stock Talk Weekly, Gavin, Shark, Juicy, Bull Trade Finder, and exclusive. 3 p.m. EST with The Street, hosted by The Street, co-host for Stock Market News and Catherine Ross. I'll be a speaker on that, probably with Sarge and some other The Street guys. 7 p.m. EST, how to invest in cannabis. We've got Brad from Stock Market Nerd on there. We got the Wolf of Weed Street, Jason Spatfora will be on there. Zach Sokol, and a couple of other really great people. And then 8:30 p.m., we're going to be discussing the coin that went up about, 50-60% this weekend? That is SHIB, becoming one of, I think, the top 10 largest market cap for coins. So listen, it's not, it's just, hear about it and learn about it. So that'll be hosted by Vegas and at the Blonde Broker. With that being said, this was so much fun. I loved today. I had a great time. This was invigorating. Can't wait to run it back tomorrow. Wishing everybody health, wealth, success. If you want to be added to the calendar, just DM me, shoot me your email. If you want 25% off on TrendSpider, again, just shoot me that over and I'll send you the discount code.